This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. It's Thursday, February 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets are March corn up a penny and a half at 432. March soybeans are up 6 1/4 at 11.54 1/2, and March Chicago wheat was down a penny at 5.64 3/4. This morning we had a flash sale, export sales announcement, 178,000 metric tons of corn to Japan. 154,000 of the total was for 26, with the balance 24,000 coming for 27. We also saw export sales this morning, pretty disappointing across the board here. Corn, 685,800 for old crop. That's well below the low end of the range. We sold just a little bit of new crop, 11,700. On the soybean side, also right at the bottom end of the range, 407,100. They were looking for 400 at the bottom there. No new crop sales for beans. On the wheat side, 243,000, which was just below the low end there, and 107,000 for new crop, which was I think some rolling from old crop to new crop there. On the meal side, 263,600, and oil 1,500. We are through 17 of 19 settlements for our spring crop insurance discovery time period here. Corn right now is averaging 461. That's up a penny from the previous settlement there. And on the soybean side, we're averaging 1107. That's up 2 cents from the previous settlement. And so we've got a couple more days there. We got today's settlement and then obviously Friday's settlement, and we'll set that price. Dustin, we're going to see, first notice day here. Guys are going to be needing to make their decision if they haven't already here today. And we'll get that crop insurance price set tomorrow. Interesting conversation starting the day here this morning with you guys, just in terms of looking at corn. Kind of a scenario where you're trapped with good demand and certainly enough production and enough supply, so it's kind of going nowhere. But I guess share a few thoughts here this morning as we start, and we'll throw it around the room.
Yeah, thanks, Dan. Yeah, I think a big thing about corn is we've had relatively elevated barge rates downbound, and we've had river levels low. They've been coming back up. Memphis is coming back way back up off the lows. And then, yes, really strong demand. So generally speaking, you've seen some fairly decent basis levels in the East, a lot of competition for corn. And, when people look at March, May trading down to 14 cents earlier in the week, you think, why, right? And a lot of it could be that there's still a lot of bushels in the West that the way that they perform, that, they deliver corn on even if it's not a great basis contract, it's still, if it's unpriced basis, they'll have to make that same decision just as anyone else this week, right? And today's that last day. So if growers have unpriced basis only contract, maybe they've gotten paid 70% of that original cash price at the time they made the basis contract. What happens is 30% of that equity is held back, and that's really to collateralize a long futures contract. So long futures contract is the other half of that contract. And when that's priced, it locks the whole cash price, and then the grower can be paid out on 100% of that bushel instead of 70%. And if the grower doesn't make that decision, though, because prices have been stagnant, we talked about that a lot earlier, they've been fairly stagnant, then they can either roll at the end, they can roll it to the May contract and discount that basis. So if that's 11.5 cents right now, you just take 11.5 cents off that basis plus a fee, and now you're off to the May contract, and you're still unpriced corn off the May with a lower basis. So I think that could explain maybe some of the weird spread action that we had this week, is that even though we've got really good demand, we've got a fairly active and busy river, and the river levels coming back up. And a lot of people in the East scratching their heads saying, demand's strong. Why wouldn't we see higher prices, or why wouldn't we see more narrow spreads? It may just be the function of there are a ton of bushels in this country that are still using these same contracts. We don't have multiple corn contracts. We have one single downbound river design contract. So I think you come out of First Notice Day and the traditional strength that we've had post First Notice Day, I don't know that it's here, because I didn't see the way down of selling for this week. I think a lot of it was rolling, right? And that, so like the idea that you'd see weakness into First Notice Day and strength coming out of First Notice Day is that too many people are opting to sell, and that's artificially pushing the corn price lower than it should be. And then once that selling pressure lifts, so does the corn price post First Notice Day. I didn't see that selling pressure. I saw a lot of roll pressure early. I didn't see a lot of selling pressure. So I still think there's a lot of corn out there. And yes, we've got a good demand story, but once that transfer happens from grower to demand and demand satisfied, the balance sheet suggests that we're capable of a 2.5 billion bushel carryout. So even with all the demand in the world, we're still left with too much supply in the end, is what my concern is. And I think like you would, if that is the case, you would see Sep D spreads at full carry again, like we've seen. Might take until August for that to happen. You may see it July D spreads at 60% of full carry, which is a good 15, 16 cents worse than where it is today. I could see all that happening and not be surprised. Then again, I mean, we might have a South American problem in a couple months. We may have a U.S. problem this summer. That's the fun part about markets, is you can't predict what the future is going to bring. We may get a lot of a bailout and price action because of unknown weather coming up. So I'm excited to see what happens this summer. I'm actually a lot more optimistic on farming revenues this year than when we were last year. I think it could be a much better year, personally.
Justin, what's your thoughts?
Try not to be a broken record here, but we're in a First Notice Day. We've talked about this a long time. Spreads acted like, kind of we thought they would. That being said, you can argue that we've had certainly beans have had a rally into First Notice Day. You can actually argue that corn has as well, depending on which month you're looking at. Certainly December corn has had a rally into First Notice Day. And First Notice Day, for a lot of different reasons that we've talked about on the show, can be a turning point. And so I think it's important to see how it acts this week and early next week. So like, for example, if you rally into First Notice Day and then it fails, it sells off. Or say you break into First Notice Day, it tries to rally right afterwards and then fails. That's a really bad sign. So I'd like to kind of see how it acts, right after First Notice Day. I'm personally flat. I think there could be a turn. A lot of times you see turns in relationships as well. So I'm actually curious if we see a turn in like the bean versus corn relationship after today and tomorrow. Beans have been gaining dramatically on corn. Wheat's been gaining dramatically on corn going into this. So I'd like to see how we act. I do think like today's export sales were pretty disappointing across the board. Corn's been just rock solid for months and months. This is the first kind of weakness we've seen. So now is South American, production finally catching up, and we're going to start losing some of that business. I think that could be something that could be negative to corn. And then we have, before you know it, we're going to be at the March, end of March stocks and acreage report. So there's a reason that this is a seasonality, right? We're getting into a lot of uncertainty and a lot of, okay, we've digested big yields, good demand. We've digested all the old crop story for now. And pretty soon we're going to be getting ready to start planting corn and beans. So that's why we start getting more volatile this time of year, and that's why the seasonals are the seasonals. So post first notice day, a lot can happen, and I'm with Dustin. I'm actually cautiously optimistic, as I've said before last couple days. So I'm kind of flat right now, and I'm just kind of waiting to see what I think next week.
And Dustin, you referenced before the show too that when you start putting pencil to paper, soybeans for some areas, or for a good majority of the areas there, but I mean, it looks a little better profitability, at 1131 and versus 467 and 3/4 today for some guys.
Yeah, it's not like a crazy high ratio, ratio being no beans divided by decent corn. So when you think of a really high ratio, it's like 2.65 to 1 pre-planting. 2 point, in the lower 2.4s, it's not like it's exceptional, but I think the costs have really crept up quite a bit for a lot of guys in corn. And when we're starting to see anecdotal, reports of what to expect, it's starting to look a little closer to what the university numbers are suggesting, which is like Farm Doc, for example. You just take their number at a zero basis, and high productivity corn in Illinois is definitely more profitable for beans than corn as it stands today, if you were to take today's prices. So, we saw a much more even profitability in corn and beans last year than what the acres would have suggested. We had 98 million corn acres last year. It's absolutely crazy, right? Like that was a huge surprise to the market. Most number of corn acres since 1936. So that I think that there's some unintended consequences of ECAP, bridge payments, high insurance subsidies on giving the confidence to get corn planted, especially in some of those fringe areas. So I don't want to make a big argument about acres right now. I really think that you got to be humble and expect anything. I would think under normal circumstances, we would see a big shift back towards beans, given the circumstances, high cost for corn, but want to be careful with that thought going into that report after what happened last year.
Yeah, just to add to that, I do think the 80% subsidy on ECO and the aggressive farm bill is altering normal decisions on acres. It's such a huge factor. We talk about it a lot on the show, but there's such huge safety nets on there, and farmers love to plant corn. So that's to your point, like if this was a normal year, I think we'd be switching back 4 or 5 million acres at least. But unintended consequences, I agree. We've had some growers that are going to plant more corn because of that, and they like to plant corn. So maybe the meeting with between Trump and China, maybe there's depending on how that goes, maybe that changes attitudes going into planting season as well.
You'd have to feel like $12, some kind of number of beans would get people pretty excited, if you're trying to freshen up a balance sheet after the last couple of years.
Yeah. And borrow a lot less money, handle a lot less grain, all those kinds of things come back into play. But to Dustin's point, that's usually we tend to see that above a 2.5 ratio. So we're kind of in no man's land. We're at the high end of the range, and the ratio it's at 2.42 right now. So it's slightly above average, but it's definitely not screaming, more bean acres.
Ben, you've been thinking this morning. What's on your mind? You're muted.
First thought is, Dustin mentioned he thought there was more rolling than selling pressure, and I would concur with that. And I think it's really just a good thought here that if you're looking for better pricing opportunities, I think you have to lower your expectations on old crop. I think every 15 to 20 cent bounce will run into a lot of selling until we see something materially change with supply disruptions, whether it comes out of the safrinha crop or U.S. planting or whatever it may be. That's going to be there, and you don't want to put yourself in a later on position where you've rolled this 3 or 4 times and now you're with the crowd and looks like, oh, everything's going to be fine, and you got to cannonball it. Those are the worst case scenarios. So I think lowering your expectations is important on old crop. I see some people putting crazy numbers out on what they think we'll plant for beans, and I just don't think we're there yet. I think that no beans are going to have to really be the lever on what we can expect here from planning decisions. And the best framework we have is historically is the ratio, and 2.6 probably gets it to where it needs to be. So I'm just not fully bought in yet that we've done enough work in beans.
Very good. Ryland, quickly, let's talk a little livestock. The Packers slowing down is finally starting to show up. It's kind of catching up with the market here a little bit. And then interesting to see the back end of hogs carve out fresh all-time highs. So they just keep trucking on the back end there. What are your thoughts here this morning?
Yeah, I mean, we're seeing these weaker kills really start to support the beef. I mean, beef went pretty much from sub 370 right up almost up to 380 yesterday. So it's definitely having its effect. Futures right now, I mean, overall, we've seen these kind of midday rallies just get crushed, and April's really been kind of struggling with a 20-day moving average. So it just feels like the futures are kind of in limbo right now, kind of this weaker tone right now, a lot of concern just about the price being so high. And we're really seeing more of the motion in the beef right now than on the cattle side. We still haven't seen any cash yet, and it looked like 245 bid yesterday, a 250 offer just wasn't going to be accepted by either side. So hopefully we can kind of meet in the middle here, but we'll see. It just feels like the trade's been very sideways, kind of back and forth for right now. We really do need to see that cash leg higher, I think, to get everybody a little bit more optimistic here on the longer term. And on the hog side of things, yeah, I mean, like, we've had 7 days straight up. It's been really good price action. Open interest climbing pretty sharply here, adding it was up another 3,800 contracts. And, August is taking a lot of that. The back end's taking a lot of that right now. So I think there is just a little bit of, kind of the rising tide raises all ships. We got June hogs back up over 110, July's 112. So like, these are great prices to see so soon, and I think just it's really creating some great opportunities here just to look at the forward margins. So I think overall, just, the trend is your friend on this. It seems like every dip we've had has been met with pretty excessive buying. And on the cash side of things, we are starting to see things pick up here. I mean, we're up to 91.21 already. So we're starting, just kind of feels like it's last year's playbook a little bit, where we're going to start here and still kind of just keep the seasonal momentum getting pushed forward and forward. So feels like we're getting a little bit overbought. So I wouldn't be surprised to run into some resistance here, but overall the news is still really good. I mean, like we said yesterday, bellies were probably going to be the leader. And at this point, they were up 321 yesterday. So I think that is still going to be the focus here this week.
Very good. Appreciate the update. We just came into the open. Right now, we got March corn up 1.25 pennies there at 431 3/4. March soybeans are up 5 1/4 at 1153.5, and March Chicago wheat is down about 3/4 at 565. Tomorrow is Friday. So it's everybody's favorite time of the week. We'll have Fun Fact Friday. You never know what Brian's going to come up with, so be sure to tune in. Also, notice a couple of links there in the comments section. First and foremost, if you or know of anyone who is a college ag-focused major, check out the scholarship competition we're going to be putting on. AgYield NextGen Foundation is going to be sponsoring national scholarship competition. Going to go through a 6-week simulation. It's going to be really fun, an awesome experience for college students. You're going to be playing for some wonderful scholarship prizes. So be sure to check that out. You need to be enrolled by March 27th. If you got any questions, let us know, but definitely check that out. Also, War Room Report. If you're looking for a deeper dive and analysis into some of the things we're talking about on a daily basis, keep you up to speed on everything that's going on in the markets, go ahead and check out the War Room Report. The link there is, again, in the comment section. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.